How to make money with a high-yield savings account. A high-yield savings account is a kind of savings account in which you can deposit funds and receive a higher interest rate than you can in a regular savings account. But before we start, subscribe to this channel and click the bell icon to stay connected and updated. Since high-yield savings accounts, like conventional savings accounts, can be guaranteed by the government, they may be a safe way to store any cash you may need in the future without the expense of stocks or the withdrawal restrictions of retirement accounts. Let's take a look at what a high-yield savings account is, how to pick one, and how to get the best out of one. Everyone would do so if there was a fast way to get wealthy quickly. Unfortunately, the road to financial independence is littered with persistence and discipline. You might save it in a bank account, but you could be tempted to use it. Instead, you can open a high-yield savings account to save for short-term goals or to create an emergency fund. After all, if your money's going to be sitting in an account, why not make the best of it? What are high-yield savings accounts? High-yield savings accounts are bank accounts that pay a higher interest return on deposits than standard savings accounts. They can also be referred to as high-interest savings accounts. A higher interest rate is the name of the game when it comes to investments. It translates to a higher rate of return on your investment. The interest rate is the amount of money you'll be paid by the bank for the benefit of holding the money. A 0.01% interest rate on a typical savings or checking account, for example, is not unusual, while interest rates on high-yield savings accounts will vary from around 0.4% to 0.9%. Here's how the gap plays out in real life, assuming a $10,000 balance after 1 year and no new deposits. That's a disparity of around $90 per year, and the discrepancy widens the moment you start making monthly contributions to raise your savings. For example, if you make $100 monthly deposits, the equivalent of $1,200 a year, your year-end monthly balance in the low-interest savings account will be $11,201.06, compared to $11,295.33 in the high-yield savings account. This adds up over time. One caveat: high-yield savings accounts which have recurring management costs and/or minimum balance conditions. However, certain bank accounts do not have these provisions or payments. When you do see them, make certain that the payments do not balance out the interest you intend to receive. After all, you want to employ your money. You want to use the same compound interest calculator to verify. Look at the terms and conditions to see how much they compound interest. It can be done on a regular, weekly, monthly, semi-annually, or annual basis. How is the high-yield savings account determined? Unlike CDs, which have fixed rates at the point of deposit, high-yield savings accounts have flexible rates that are tightly tied to the Federal Open Market Committee's Federal Funds Pace, FOMC. The federal funds rate is the interest rate at which banks and credit unions borrow and lend overnight balances to other financial institutions. When the Federal Reserve cuts the federal funds rate, interest rates on high-yield savings accounts fall. When the Federal Reserve raises interest rates in the future, high-yield savings account rates should rise as well. With sites like Credible, you can discover your high-yield savings account choices and compare APY prices in minutes. Applying for a high-yield savings account online is a quick procedure. Is your money secure? High-yield savings accounts, like conventional savings accounts, are federally guaranteed for up to $250,000 if opened at an FDIC-insured financial institution, such as a traditional bank or an online bank. If you have a high-yield portfolio at a credit union, your account will be guaranteed for up to $250,000 by the National Credit Union Administration, or NCUA, the federal agency that oversees and insures credit union financial goods. How can you find the best high-yield savings accounts? It's important to shop around for the best high-yield savings account. As previously stated, some accounts have minimum monthly balance conditions that vary based on the plan. Some can also have monthly repairs or other costs, which may easily add up. Be confident that you read all the satisfactory pattern. Some accounts, for example, need a minimum balance that earns you at least 1 penny per month, depending on the annual percentage yield, APY. Other accounts have a reasonable rate if you spend at least $10,000 and keep this balance for the duration of the account's life. Many banks do not charge an annual servicing fee, although there may be other costs associated with the account, such as fees for domestic wire transfers, overdrafts, or recalled deposit goods. When it comes to interest, the rate you'll get is determined by the Federal Reserve interest rates, which banks use to measure the APY on savings and investment goods. However, if you search around, you'll usually find conventional brick-and-mortar banks, online banks, and credit unions that sell high-yield savings accounts with an APY of around 0.5%, though higher rates might be eligible. Alternatives to high-yield savings accounts. A high-yield savings account will not be suitable for all. If you want to save money but don't think a high-yield savings account is ideal for you, here are a couple of options to consider. Cash market account. This form of savings account can receive higher interest rates than conventional savings accounts. It, like a bank account, allows you to access your money through checks and a debit card. The disadvantage is that you may receive less interest than in a high-yield savings account, and you may be required to maintain a minimum balance or pay a monthly premium. Capital Market Deposits (MMA) or Money Market Deposit Accounts (MMDA) have features that other savings accounts do not have. You can gain a higher interest rate than in typical savings accounts if you keep a high minimum balance. MMAs are FDIC insured and have check writing and debit card capabilities. You can be charged recurring maintenance fees, and you're limited to 6 purchases per month, equivalent to high-yield savings accounts. Certificate of Deposit (CD). CDs can offer higher interest rates than high-yield savings accounts. However, in order to receive the best interest rates, you would normally keep the money in the CD for an extended period of time. You'll even face redemption fees if you withdraw funds from the account too soon. Certificates of Deposits (CDs) have higher annual percentage yields (APYs) than other high-yield deposits or money market accounts. You get a higher interest rate in return for leaving the funds unused in your portfolio for a set amount of time. If you need to withdraw your money sooner, you'll be charged an early withdrawal penalty. You may also diversify the investments by investing in stocks, bonds, real estate, and so on. Investing entails risk, and you cannot count on a single commodity to make you wealthy quickly. However, if you're in it for the long haul, investments will help you build your wealth. Are there other money-saving tips? Though interest rates are modest, refinancing your student loans or refinancing your mortgage will reduce your monthly payments by hundreds of dollars. If you have more than one student loan, you may want to consider consolidating them into a single monthly payment rather than many. If you have good credit, refinancing your mortgage will even be used to convert a variable interest loan to a fixed interest loan to obtain a lower interest rate. You would also be able to go from a 30-year term to a 15-year term, or vice versa. With interest rates as low as 3%, now is an excellent time to refinance your mortgage. You'll find the best refinance offers and pre-qualify for a refinance in minutes with Credible. How much should I be saving? Your financial position is peculiar, so the general rule of thumb is to have 3 to 6 months worth of your gross monthly spending in cash saved. A smart way to start saving is to establish an emergency fund, which may be used in the event of an unexpected event, such as a work loss or significant home or auto repair. If you don't have any reserves, you could be tempted to use credit cards to cover day-to-day expenses. However, if you're unable to pay in full per month, this can be costly and can damage your credit ratings when your usage increases. Next steps. A high-yield savings account could be a good middle ground if you want fast access to your money while still earning a reasonable return. Still, before you sign up for one, do your homework to find the right prices and conditions for your specific case. Determine the interest rate, costs, mandatory initial deposit, monthly balance conditions, and whether there's a monthly withdrawal or transaction cap, as well as any required minimum deposits. Consider FDIC-insured banks or online savings accounts to ensure the safety of your funds. Consider an account that provides flexible features such as online banking, a smartphone app, or the opportunity to conveniently move money. That's all for today. If you liked the video, then press the bell icon to get updates about more exciting videos.